Ryan Reynolds here from Mint Mobile. I don't know if you knew this, but anyone can get the same premium wireless for $15 a month plan that I've been enjoying. It's not just for celebrities. So do like I did and have one of your assistants switch you to Mint Mobile today. I'm told it's super easy to do at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Reality radio for a really great future. We're talking real money.
Welcome to a prolonged period of normalcy. No, we have no interruptions, no football Oh wait, Tom's here. Oh, we might have.
So we have some intellectual interruptions. What you're saying?
Oh, is that what they're called now?
That's what it's called.
Oh, okay. We'd have no retire meet. That's over.
Oh, no snow.
No snow.
We got a snow
no
hangover.
blizzards.
We got retire meet hangover. Yeah, thank you. I feel so much better now with you pointing all this out. So.
It's the normalcy edition of Talking Real Money.
I will say,
Hello,
however,
yes.
I still have like 6 inches of snow in my backyard at this moment. So
Really?
yeah,
Still.
Wow,
that's a lot of snow.
I know. My dog my old dog is.
Yeah,
I know it was not easy. My old dog is. I think he's more tired of it than I am. So
Yeah,
I feel
you
bad
have to
for
teach him some new tricks.
Yeah, pretty much. So anyway, welcome.
Yeah, it's great to have you with us here on a Saturday if you're listening live, or some other day if you're listening to the podcast. And no matter when you listen, we encourage you. We love it when you call your questions into us at 855-935-TALK, 855-935-8255, because that's a magical number. That's a number that comes to the show live when we're on Saturdays, but then it just magically comes to us anytime throughout the week. And you can ask your questions anytime you want. But if you call and ask during the show, there's an added benefit to doing so.
Other than just talking the two of us live.
That's what I said, added benefit.
Okay.
We're the primary benefit. The secondary benefit would be a free copy of one of our books. That's all we're saying today. We're going to send you a free copy of one of our books. We have several books.
You'll like them. They're helpful.
And so this is the Grab Bag book weekend event.
I got Bill out there with the bag right now, so whatever he pulls
so
out,
he'll
that's
be
what you get.
grabbing the book out of the bag and getting your info, and we'll ship that out to you. We won't even charge you postage. It's just really, truly free. We won't bug you. We won't.
You talk about anything money related,
except we help you.
Yeah.
Yeah.
I do want you mentioned retire meet, so I'm going to say thank you to all of you listening that came out last Saturday. Truly a terrific event. Now that was the 5th one, hard to believe, and we had over 400 of you showed up, and we're doing an online survey right now, but the comments have been terrific, absolutely terrific. So people really liked it. So
yeah, there was one person who said I'm too loud. Yes, I am loud. We do need somebody on that board.
I think it was more than one, but anyway, okay.
Okay, a couple.
Yeah.
We need somebody on the board, because I do get a little excited.
You're like Roger Stone. I just want to be noticed, okay? I don't care what it's noticed for. I want to be noticed.
I am not like Roger Stone.
That was not kind.
If you want to compare
me to
Roger
Stone.
If you want to compare me to somebody loud and bombastic, at least make it Kramer or something.
Okay, all right.
Not
we'll go
Roger,
Kramer.
Roger Flathead Stone.
Yeah, but I think Kramer does
that
more
dude
damage than Roger Stone.
He
has a weird shaped head. Yeah, he does. Unusual.
No, it looks like he got hit in the head with a shovel.
It may have been.
What did you say about Kramer?
He does more damage, I think, than Stone does, actually.
Oh, I don't know. I gotta tell you.
Really? Think
Roger
of all the
Stone.
time. Look, just go back like 1.5 months when Jim Kramer told you what? Basically, to get out of the market, right?
Yeah, but are you dumb enough to pay attention to him? Come on.
Apparently he's been on CNBC for a long time. People are watching him.
Don't do what he says.
Yeah,
don't do what any of these idiots say, because they don't care a whit about you. They care about their ratings. They care about their sponsors. They care about the people whose products they sell. They don't care about you. I know. And then, of course, I don't blame you for asking, well, what makes you so special?
Yeah. What do you care about?
Yeah, why do you care about me? Because I don't know, a conscience.
I think it's
I don't know.
it's a deeper philosophical take, though, too.
Oh, you are the intellectual interruption
Thank you.
today.
Thank you.
Oh, you're
All
going philosophical on me.
I am. So,
well, we have a couple of things that I want to personally congratulate Tom. I want to congratulate you.
Thank you.
And Vestory and Dimensional Funds and Vanguard Funds and Fidelity Funds. I want to congratulate all those who have lowered fees for investing, low management fees, low mutual fund expenses. All of you who have done that, apparently it is official, you've contributed to the health of our economy.
yeah, whip inflation now, brought to you by John Bogle and others.
You're old, but
I know.
you're really not. I mean, that's 1974. You
I
were just
know.
a pup
I know, but
during the whip inflation.
we'll tell
nowadays.
you how John Bogle impacted inflation, and those of you who are using index funds have helped keep prices under control.
Congratulations
Huge,
to all of
huge.
you. 855-935-TALK is our number. Give us a call, get a book, and get an answer to your question. Don't go away.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
You got a question? Has something to do with money? Give us a call at 855-935-TALK, 855-935-8255. Too loud?
No, you're too soft. You don't get that a lot, so you might want to turn up the volume. Good for you. And for those of you playing along at home, Don just mentioned that I mentioned whip inflation now. That goes back to the Ford administration, like Gerald Ford. I know. That was a long time ago.
Like day one of the Gerald Ford
I
administration.
know. Certain things stick with me.
He just opened
a lot of them I'd like
the
not
store.
to. Yeah, but at any rate, the bottom line is this. It's pretty interesting. There's a piece that appeared in the New York Times yesterday about John Bogle, who's passed away a month ago. And they're giving Bogle credit, and he deserves it, for reducing the cost of investing. He deserves that.
He did.
Yeah,
he did.
right.
Because, I mean, when I back in the old days when I was a stockbroker, the average annual expense ratio on these here mutual fund things was like 1.5% to 2%.
The average fee paid by stock index fund investors plummeted by 40% in the decade that ran through December. That according to Morningstar. By the way, if you're listening and you own American funds, that has not been the case. Just so you know. Because people all the time come in and tell us, well, I'm saving a lot of money. I'm using American funds now. No,
well,
they're not.
You know, actually, here's the trick with American funds. If you get into the A shares, they're 5.75% to get in, and then the expenses are about 0.6% of 1%, 0.7%.
You could still go to Vanguard and own it a whole lot cheaper.
A lot less. But here's the trick with the brokers pull. You need to check this out, too, because I've run into this a lot. They'll sell you what they call a no-load American
yeah, lovely.
fund.
Yeah.
And they're C-class shares. Go look at your statement and see if it has a Class C on there.
Any
Class
alphabet
C
soup
shares.
behind them.
Yeah, but C's are the killer. Those annual expenses can run 1.6%, 1.7%.
Ran into that at the office the other day. I feel bad when I have to tell people that. But so John Bogle gets credit for doing all this, and here's what the Bureau of Labor Statistics found. How they come up with this number, I have no idea. So don't press me on
It's what
this.
they do.
Overall portfolio management costs in the United States plunged by 5.2% in January alone.
Wow.
I have no, but they do give.
That's why I congratulated us on that, too.
Oh, thank you. They do.
We keep our costs low.
So they do say that due to the decline in investing costs, which has been dramatic, by the way, they also say that now about 40% of people that invest use low-cost index funds. That's a lot. I mean, that's a double from 10 years ago, which is astounding. But that has reduced inflation. Yeah.
Coincidentally, is it a coincidence that 10 years ago we started Vestory and started doing this?
Oh, it must have been us. Thank you, Don. I feel so much better. That has reduced. the. Here's the part that you might find interesting, because the rest of it maybe not so much. They say that inflation went down by 1 basis point as a result of lower costs out of everything. When you look at everything,
That's
one basis point. And they said, but that adds up. 1 basis point here, 1 basis point there. It adds
Pretty
up.
soon you're talking real money.
There you go. Thank you. I was waiting for that. Speaking of going, that's before win, by the way. Where does that quote come from? $1 million here, $1 million there. Pretty soon you're talking.
Pretty soon we're talking about. It's actually $1 billion here, $1 billion there. Pretty soon we're talking about real money. Everett Dirksen.
Yeah, that's before. So now who's the old guy? Okay, so you got that one coming.
That's why I came up with the name for the show. Pretty soon we're talking real money.
Exactly.
855-935-TALK is the number to talk real money. And Lisa, welcome to the show.
Hello, Lisa.
Good afternoon. How are you guys doing?
We're having fun. How can we help you today?
I am calling because recently I was given a gift of $100,000. And I still have the check. I haven't even cashed it because it just came probably 2 days ago. And all I have is a regular savings and checking account. So I have no idea where to go from here.
Well, you could come here and take us to lunch right after the show. I can think of a few. I don't know. What does Howie run for the? No, it's Ascend is the real steak, right, Don? Because that was like $80 an ounce.
I don't
or something.
go to expensive restaurants. I go to
kidding.
McCormick and Schmick for the $5.50 cheeseburger happy hour
Well,
meal.
no, that is a fabulous idea.
There you go.
But in the meantime,
all right, got it. It's not very helpful. Well, okay.
Go ahead, ask
couple
the
of questions.
You know the
question. Number one question is, what do you want the money to be for? What's the purpose of it?
well, I'm in my late 50s, so I do need a retirement because I don't have one. I've never had this kind of money in my life before.
Mm-hmm. Okay,
so
that's a
it would be
great
nice
start.
to know even where to put it, you know?
Before we get there, because you see, we like to think that there's just like this answer, put it here.
Right.
And we're done, but it doesn't work that way. It's not that easy, I hate to tell you. It's easy, but it's not that easy. When do you plan to retire?
I hadn't planned to retire.
Well, there you go. Even better.
I just thought that I was going to have to work until the very end, you know.
Do you like your work?
I love it, but it's physical, and I can't keep doing it. I clean homes.
Do you have so you do not have a retirement plan through your place of work?
No, I'm me. I am work.
Okay.
She's her place of work.
And are you married or single?
No, I am married.
You're married. Okay. So
and my husband's disabled.
And so there's been no one's really sat down and came up with a plan for you quitting work, et cetera, et cetera. That's what I'm getting.
Yeah.
No, there's been no time for that. It's been just a few days.
Okay.
Here's one. Let me start with step number one.
Okay.
Step number one is cash the check.
Yes, that should be
and
deposited
get it into
right
something
away.
that earns interest. Now, what I would suggest initially is you go to bankrate.com and you find a 2%. There are money market accounts out there, money market savings, that pay about 2% right now. Get it into an account that's earning something, even if it's almost nothing.
That you go to bank.
Can I do that through a credit union?
You're probably not going to make much. That's the problem. That's why we said go to bankrate.com, because there you can find institutions that are paying. They look at everybody out there and they say, go here for the best deal. I don't want you to buy a CD, but I want you to. I like Don's idea of
right now there are, for example, the American Express Bank is paying 2.1%. Capital One Bank is paying 2%.
And you could do that online. Probably go open the Capital
you can set
One
that
account
up online
and probably deposit the check right there off your phone.
And exactly.
Then you don't have to go
so
anywhere.
I would go. What you could do is usually you put it in your checking account.
Yeah.
And then they'll do a transfer over into the money market where you could be earning as much as 2.4% on daily liquidity money, which is wonderful. Then what I want you to do is go to talkingrealmoney.com. And up at the top of the page, it says Risk Quiz, RISQUIZ. I want you to take that quiz.
Okay.
Then after you take that quiz, give us a holler back, and we will help you figure out a portfolio through somebody like Vanguard where it's appropriate for your risk tolerance and will earn you likely. You're going to have to take more risk, but has the potential to earn you a lot more money toward that inevitable day when you want to retire. And thanks for the call. We appreciate it. Back with more in a moment.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information, talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And bear in mind, all of these banks that offer, and they're even if they're not a bank in your neighborhood, for example, American Express National Bank isn't really a bank that you can walk into. It's just American Express has their own banking institution.
You don't really need to do that anymore.
No, but I just want everyone to know they're still FDIC insured.
Oh, okay. Yeah, your money's
for up to $250,000.
Right. Each.
So it's safe, super safe. And then the other thing, we were talking about this during the break. This is a fascinating question. I just got a bunch of money.
Mm-hmm.
What should I do with it? We've been trained to ask that question, and I think we've in large part been trained. I know when I was a stockbroker, one of the people would come in and say, "What should I do with it?" And we were told to just tell them what to do with it.
Yeah, there's a simple. And
put it in this.
Did you mention the phone number? And the free book
No,
offer?
I'll do it again, though. It's 855-935-TALK, 855-935-8255. Get a free book when you call and ask a question on the show live. Yes, sir.
And I want to add one thing to because if you know nothing about this and you come into money. So we had somebody come to our office this week who just came into a very large inheritance. He's getting ready to retire, and his thought was, I'll go interview 4 or 5 advisors. Which on the face of it makes sense, right? It sounds that's good. Then you go find out. But the problem is he doesn't know what he believes about investing. So he's gone to all of these places. He's gone to a major brokerage. He's gone to a guy that sells REITs and annuities. He came and saw us. He's gone to see somebody else who also uses ETFs. But he's listening to Bob Brinker. I mean, I didn't even know Brinker was on the air anymore.
Don't listen to Bob Brinker. The show's called Bob Brinker's Market Timer.
You can't find it on the air anymore, but he follows the newsletter. No. But he's confused. He's heard from all, and shockingly, every person he's been to has a great pitch. Really. I mean, with the amount of money he's talking about, I said, they will literally crawl across cracked glass to get that account. They literally will, because it's worth so much to that company to get that deal. Mm-hmm. You have to decide what you believe. I gave him the 10 things that Dimensional puts out there, because this is stuff that no market timing, proper market exposure, but everybody needs to have something they believe about investing, because if you go out to the world and say, I have all this money, they've got a great solution for you. Absolutely.
Oh, absolutely. In fact, I got a note this week from a gentleman who had a portfolio at Vanguard that was relatively well diversified between large and smalls and bonds and stocks. And he went to a guy who said, "Whoa, what are you, stupid? Why? This is a dumb idea. You're taking all this risk with stocks when you could, get this, when you could eliminate the risk, take a nice 3% check every year from a portfolio of high dividend paying stocks and real estate investment trusts."
Now, these are publicly traded real estate investment trusts?
I don't know.
Okay.
They didn't tell him that. Oh my gosh, if they're non-publicly traded REITs, even worse. But the reality is that is not a diversified portfolio. Companies pay high dividends generally because they're in a little bit of financial trouble.
They need you to buy their stock for that reason.
Or they've just been paying a high dividend, their stock price slipped, and they're going to cut the dividend.
And remember, when you buy those, you eliminate a lot of the market, because it's only, 60% of stocks that pay a dividend.
Right.
So now your diversification is reduced. So
and it's probably a broker who's selling an actively managed dividend fund, which will limit you to 100 stocks maybe.
Exactly. So no, that's not a good. Yes, and somebody else that this gentleman went and saw said you put it in REITs and you put it in annuities. That's your bond portion. That's your safe portion. The other portion is in stocks.
Oh, I can almost assure you, I have heard a lot of stories about these guys. If they're pushing the annuity REIT combo, then the combo is generally equity indexed annuities and non-publicly traded REITs, both of which pay commissions of over 8%.
And by the way, if you think they're safe, go look at their performance in 2008, 2009. Take a look at how safe all that was. REITs.
Well,
I'm talking about non-traded.
I was going to say the annuities just didn't lose you anything.
But the non-traded REITs, not so much.
They come and problem is they don't even have a track record because they're not publicly traded. 855-935-TALK is our number.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
The show about your dough on the Handy Dandy Radio or as a podcast during the week. I'm Don, that's Tom. This is Talking Real Money, and you are always invited to be a part of what we do, to ask us questions at 855-935-TALK, 855-935-8255, and if you call and ask a question on the air, we'll make sure you get a free book on investing, one of Vestry's excellent books that we have available right now. So we'll send those out to you next week. 855-935-TALK, 855-935-8255. And Susan, it's your turn. Welcome to Talking Real Money.
Hi, thanks for taking my call. I've sort of a basic question. When you're comparing fees that they charge like at Fidelity or Schwab or something like that, do they all charge, do they calculate it the same way? And if so, how do they calculate it? Like, is it quarterly, yearly?
So that's a great question. Are you talking, so do you have someone there who is managing your money, or you just have stocks and bonds at one of those custodians?
I was looking at just doing like an index fund at one of those places, and so I was just wondering if if you're looking at comparing apples to apples, do they all calculate it the same way?
Yeah, the short answer is yes. If you're going to do this on your own, then the number you're looking for is the expense ratio of the security you're going to hold. I'll give you an example. I believe now Charles Schwab has an ETF that owns the S&P 500, and Don's going to look it up, but I'm pretty sure it charges like 2 or 3 basis points. It's exceedingly inexpensive. Conversely, you could go own the American Fund's Growth Fund of America, which holds basically the same securities, and pay, I think it's 65 basis points. So 0.2 or 0.3 versus 65. There's a wide range there. So the answer to your question is yes, that is the number to compare. And the other one to think about,
the Schwab,
which one is it now?
The Schwab S&P index is not an ETF. It's actually an open-end fund.
Okay, have a fund, okay.
And it's SWPPX, and it's 0.02 of 1%.
Yeah, I mean, it's very, very, so you own 500 stocks there, and that, if you're just going to go own that, that's probably, although Fidelity, as you now know, has these funds that are free. We're not quite sure what they hold. We're waiting. The jury's out on that. But if just for cost, then I would go there. But you're asking the right question.
Yeah. And just shop. Go to Morningstar. It's the best resource to get this information. They will show you an expense ratio that is the same, calculated in exactly the same way throughout the entire universe of mutual funds.
How often do they charge that fee?
The fee is taken out of daily net assets.
But that's an annual charge you're looking at.
That's an annual percentage, but they take 1/365th of it. Actually, it's based on five. It's based on the week, so it's 200 and something-th.
In the old days, they did it. I think
day.
It was weekly or something, but now it's daily. They pull it out of there.
They take a few fractions of a cent out every day.
It's you don't see it. I mean, this is one of the things people forget because I'm not paying them anything. Yeah, you are. That money's coming out of your account each and every day. So it's but your question is, I think, spot on. How much am I paying, and what am I getting? I think that's the correct thing to ask.
Plus, the other thing, there's a lot of great information on other things you should check out too, Susan. The what's in the portfolio, how often the portfolio turns over. You can compare performance with a benchmark. Index funds, though, will always perform exactly as their benchmark, less their fees. And
on this program, we have recommended regularly that you just own. If you just want to do this on your own, and you want to do it pretty simply, you can go to Vanguard. You can own one stock mutual fund that holds 8,800 securities. It's the Vanguard Total World Stock Index. I believe they just changed the ticker.
No, they didn't. The VTWSX is still the same.
Okay.
This one, though, because they've now reduced the minimum investment in the Admiral shares, the Admiral shares and the investor shares have the same minimum. It's just the Admiral shares have a lower cost. They've got to just combine them eventually.
So that's VTSAX.
WAX,
you're right.
VT Wax.
VT Wax. So that's one mutual fund that owns a lot of stocks around the world. It's a pretty good fund. And then you could hold the Vanguard Total Bond Fund.
Mm-hmm. Total Bond.
You balance between those two, and then you're kind of all set. It's pretty straightforward. I mean, and you get it at such a low price. It's phenomenal.
The VTWAX is 10 basis points. Yeah, 1/10 of 1%.
Crazy to own all those stocks. Yeah, it's really great.
Line's open for you right now, and you get a free book to boot. 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Tom and I believe in helping everybody become a better investor. That's why we offer lots of free knowledge at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Only because money is really important. It kind of fuels your life. So give us a call if you need a little help getting the fuel in the right tank or
using the right mixture.
Fuel.
Yeah, right mixture.
Yeah,
okay.
Right mixture. 855-935-TALK is our number. 855-935-8255. Stop by right now. We got
that
a line
doesn't work,
open.
by the way, if you have an electric car. Just thought of that. That analogy won't fly.
It's a fuel. It's just a different kind. It's the right kind of fuel. You got to put that
like AC
electron,
or DC thing or something.
And it's got to be that fuel loaded with electrons.
Okay, we're really
and I have
veering off. I know you do.
I'm
so proud of you.
Bud, you're up. Welcome to Talking Real Money.
Yes. Can you hear me?
We can. How can we help?
Okay. Yeah, I've got, in addition, my wife and I, we have retirement accounts, but I've also, since a couple years back, started investing in rentals. I've got, including my own house right now, I've got 5 houses and I've got 3 mortgages, all probably about half the value of the houses with the mortgages. And I feel like I need to start consolidating, and I've heard other advertisers, which I'm reluctant to necessarily buy into, but I was wondering what you guys thought of using home equity line of credit on my own home to help pay those off by basically banking on the home equity line of credit.
Ooh, okay.
You mean so taking out a HELOC on your residence and paying off the other mortgages? On the rental properties?
On the rental properties, yeah, but it wouldn't be quite that simple. It would be, we make an income, and that income goes straight into the mortgages, and then we bank on the HELOC, and then basically have a card that when we buy stuff, it comes straight out of the HELOC.
It sounds awfully convoluted.
Well, here's the other thing that
It does.
Yeah, I mean, with the rentals, from what I know about this, do you need to have those maybe in a separate LLC, each one, for reasons of legal protection? I have heard that. So that's one thing to consider.
Each one of them?
Yeah, that's what I mean, because if something bad happens at one, then they can go after the other.
Yeah.
That is something I have heard.
Owning individual real estate is a business, not an investment. I wish people would stop calling it an investment, because it's not. It is not. When you put money in a mutual fund or a real estate investment trust, that's an investment. When you're buying individual pieces of property, that's a job. You've just paid for a job for yourself, which is fine. Right. I have no objection to being an entrepreneur.
Yeah.
Treat it like a job, and that requires that. Yeah, well, but then you need to, as Tom said, you need a legal opinion on this. And when you're pouring your personal assets into paying down the notes, what you're doing is you're taking liquidity and you're turning that liquidity into illiquidity, which I think is foolish. Real estate is not a 100% appreciating asset, as most of these idiots out there in the real estate business would like you to believe. It is not. It's not a no-brainer. The risks are high, and they should be sold as such. The fact that you're going to borrow money to to fund your lifestyle against your home just sounds like you're enriching banks. It sounds like you're just making banks richer and not you richer. And I think that all of this is a mistake. And I really do think you need a good attorney who understands real estate law, who understands business law, to advise you on the situation with these properties. And I would not go borrowing more money. Let those things be leveraged, because that's one of the biggest advantages of real estate.
Exactly.
Is the leverage. The leverage is why real estate's been such a great investment. Cash on cash real estate historically has been a terrible investment.
Just a little higher than inflation. Not
just
much.
Slightly historically higher than inflation. These are the facts, not the rhetoric. 855-935-TALK is our number. 855-935-8255. And Terry, you're next. Welcome to the show.
Hi, Terry.
Hi, yes, it's Terry, and that last caller in your comments scared me to death.
Well, pull over to the side of the
sorry.
road then. Yeah, don't do that. Don't drive scared or angry.
I am parked. I am
Okay,
parked.
good.
Okay, so I am retired. I did a reverse mortgage on my house, which is fine because I don't have kids and none of my relatives want to move here. So, all right, let my house support me. But I did buy 2 rentals. And I'm sitting fat, dumb, and sassy, I thought, until I heard the last caller, because I get rental income and I have property managers managing those places. And my question was going to be, I don't have a bunch of money sitting there as an emergency fund if I need it.
Well, you do kind of with the reverse mortgage.
Yeah.
Well, no, because I took the equity and did that. I don't have any equity.
Oh, okay. So you've already taken the money out of that. Okay.
And put that into real estate, which is, again, we're back to this horrible issue of massive illiquidity. You can't just go and say, house, give me my money.
I know.
And here's the the Seattle market has spoiled everyone.
Yeah, it's been nuts.
The Seattle market is an aberration nationally.
I know, and I love it. And Zillow
love it now.
Yeah,
Zillow doesn't do anything.
Well, no, actually, Zillow buys homes. You probably didn't know that, but that's aside from the point. The point of the matter is exactly what Don said. It's okay to own rental properties and collect income from that. That's not a problem. But if you're leveraging, if you're borrowing somewhere else to finance that, that is not a particularly great idea.
You have mortgages on those too, yes.
Yeah, so you're leveraged to the leveraged hilt. Your home is leveraged basically through the reverse mortgage. Your rental properties are leveraged. You're paying somebody to manage the properties for you. There's another expense. Again, if you're running this as a business, then okay, but that means you better hire an accountant and make sure that you're find out what you're actually making on this.
Well,
when all is said
and
and
what
done.
what your balance sheet looks like here, right? Because you may be having a little problem. I mean, if you got all this debt on properties, I'd be concerned with that. We try and run one more call here before the top of the hour.
Oh, sure, but okay,
it's gonna be
it's
close.
Fast.
Greg, hurry! I didn't want you to have to sit across the top of the hour. Go. How can we help you?
Probably a quick question. Are there any tools to help me decide whether I should take a lump sum or the annuity from my pension plan?
Not really, but here's a great way to look at all that. Most of the time, so don't call and get mad at me, but most of the time it works out like this. If you don't want to have any risk and you just want your monthly check, you don't ever have to worry about the money, you take the annuity payout. If you take the lump sum and you invest it in a moderate portfolio, that protects you against inflation. You take money out of it and you generally leave more to your significant other or heirs. So it turns out it's mostly an emotional versus financial decision. There isn't one right answer. Yes, we run calculations for people because they retire all the time and try to figure this out.
I mean, generally speaking, the right financial answer is to let it go. the
let it go. What do you mean let it go?
To leave it in your account, to invest it in something.
Yes, okay.
To put it take a lump sum.
That's the financial one, correct?
That's the financial one,
Yep.
but there's the lifestyle one, and that's totally different. And we gotta go.
I
We'll
got
be back
the
in a
call
minute,
in.
though.
You didn't think I was going to make it happen.
I didn't think you were going to make it. All right, me of little faith. 855-935-TALK is our number. That's 855-935-8255, 24 hours a day, 7 days a week.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And there are a lot of things that as a woman, or if you have a woman in your life, they need to know about investing. That's why we have a class called Female Financial Fundamentals. We're doing it as a lunch ed in March, and you can get your tickets right now at TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.